All right. What's up, man? Good morning. What's up, man? Good morning. Get that muted. I think we're ready to rock, dude. How are we doing? Hope you guys are doing well. As you can see, your boy's sitting along. And let's see if we can get a little bit of a pop here out of these bulls. Just a bit of a scalp. Yes, sir. So I've got 140 on. Figured I'd start the day light, you know. See if these bulls can give me a bit more of a pop. Take it back up into the little range. There you go. There's one out. Second out there. Let the copier flatten here. Still got a couple ghost positions on there. 2 seconds. All right. 65.73. So 6,500 bucks. All right. Let's keep it pushing here. Now that 31 took us a bit lower, I think we have something interesting. We'll see how the rest of the day goes here. Rest of midday, we'll say. ATR's at 31, by the way. Back up into the 30s, which is a beaut. We love that. Man, if you haven't yet, come on in. Hit like on the stream. Hit dislike, man. Monday morning, if you're pissed, do it to me. I'm excited to get rocking. I gotta tell you, man, I'd love if the Bears could roll this thing over. Ooh, give me a couple clean closes, ideally more like 3. Because, you know, you gotta remember, you get this look, not really too much of a look. But then ultimately you end up with this, which you could really draw as this, which is sideways action. You could draw it a few different ways, tighter or wider. Okay, and we know, I would draw like that probably. We know that that is really common after pushes. Now, which way do we go? I gotta tell you, I really don't care. But I care a little bit, because if we could roll over, take out the wick low of, let's say, bar 32, 14. 11's kind of far. I'd be willing to short it before 11. But especially if we had a traditional RAM continuation setup here, closing on the signal bar beneath the wick low of bar 11. Give me 800 contracts, big dog, short. Do it to him. We love it. For now, in this little range, let's see if we can put anything together in the range. All right, ATR sitting 29. So volatility today, not, it's not crazy. It's not crazy at all. It's actually kind of low. But that's all right. We can get some work done. All right, let's run a poll here. All right, hit it. Hit it. Which direction is NQ going to break out of this trading range? The one that I have drawn in particular. Okay, so again, the one that I have drawn on screen right now, we're in what? A trading range. Okay, which instantly puts me into, okay, let's do logical things, buy low, sell high mentality. And by the way, on stream here, when I say buy low, sell high, buy back lower, what I mean is not the traditional, what your grandpa taught you. What I mean is we're range trading rather than continuation trading. Now, you can still continuation trade in a range if it's wide enough, especially on lower time frames. Lower time frames, 100%. 100%, because what? Things develop quicker. You can get a 2 to 3 bar continuation setup on a 2-minute chart in an 80-point wide range, whereas on a 5-minute with an ATR of 30, it's going to definitely be a bit less common. So an interesting thought is, at least for, we'll say, scalping / day trading, the higher time frame you go, we'll say with buy low, sell high scalping, the more you're going to be able to justify that, and probably the less trades you're going to take. Whereas if you were to trade this current action on a 1-minute chart, you would probably be able to catch all kinds of continuation stuff in the range, as long as you're not taking it betting on breakouts of the overarching range, which you would also see, by the way, on a 1-minute chart. See that? It's pretty damn clear, right? You see what I mean? You get all kinds of continuation. What happens to, we'll call it quality or edge as you go lower in time frame? It can start to fade. Doesn't mean it goes away. How do you make up for the fading edge on a lower time frame with a bigger sample size? I hope this makes sense to everybody. When I say this, it's like, yeah, that makes all the sense in the world. All right. Well, so far we've got up as the winner in our poll here for which way does NQ break out of this trading range. Can you believe where we're at, by the way? You know, it's like all the moves. A lot of the moves, I should say, have been overnight. And then we get to the New York session and ATR is, 30. But we're still moving all over the place in terms of price day by day. Yeah, that gold line on my chart, that's a 20 EMA. That's a 20 exponential moving average. Take it off my chart, I don't care. It's just there so we don't get dizzy looking at this all day. All right, bar 35. We're about 2 minutes out here from the close, and we're still in this trading range, so be careful betting on breakouts here. All right, minute 5 out. Let's see how 35 closes up. Explain why you took candle 32. Sure, it was actually 30.31, not 32. To the long side for a scalp. Okay, look, so a lot of you guys, well, actually, I can just leave it drawn the way it is, to be honest. A lot of you guys, straight up, not trying to be like mean or whatever, but you really oversimplify what's going on with RAM. I'd love to tell you it's just the continuation setup. That just happens to be one of my favorite parts of RAM. That isn't what RAM is. RAM is a top-down methodology. Okay, it's a way of thinking, and it's a way of figuring out what to do when you're confused, and what trades make logical sense, and how to structure them so that the math works. Okay, if it was just a setup, I mean, come on, like that doesn't account for any market change at all. You see me take less continuation setups when the market's in a trading range, right? So what, you think I just am supposed to do nothing when the market's in a trading range? Of course not. So RAM accounts for all of that. 30.31, when we have a trading range, you guys have seen me do this pretty often. And of course, the edge is not going to be quite as good as a big, beautiful trend continuation trade, but that's okay. I don't care. You have this argument. You could draw a couple of different ways depending on the time, right? Or you could draw like this, whatever, depending on how you look at it. When you have a bull channel or a bear channel turning into also a sideways range, when it pulls into the near side, you have two arguments: soft bull channel or trading range. As long as I can make sense of my risk, I can take a limit order reversion scalp. Is that making sense? No one says it's making sense, so I assume everybody's confused. Or you all just know what's up. Let's go with that one. Now again, the edge on those limit order reversion scalps, is it as good as a big trend market, beautiful stop hunt, RAM continuation, ATR 71? No, it's not. Of course not. But if there's any edge there at all that can cover commissions and fees, I'm going to hit it. Of course I'm going to hit it. The goal here is to increase sample size. That's right. And if I end up being wrong on it, the beauty of trades like that, to me, the reason I like those, is because if I end up being wrong on it, I'm instantly presented with a new setup, which would be a continuation trade to the short side, because the soft bull channel and the sideways range, if I'm wrong on that scalp, have both gotten snapped up. And most times, I'm pretty quickly presented with a 2 to 3 continuation bare body RAM continuation short, because we're curling at that point. If I'm getting stopped out, pretty good chance we're curling to the downside, right? Now sometimes it'll stop you out, come right back into the range. That kind of, it's annoying, it kind of sucks, but it's going to happen, of course. But a lot of times you get presented with a setup right away. All right, minute 20 out here. Scott says, yo, Nico, I got moved from my 50K TakeProfitTrader Pro account to Pro Plus right before reaching my 2K buffer. Is that normal? I have never taken a payout from TakeProfitTrader, he says. It's so case by case. Normal doesn't exist. People like to speculate and say, yeah, they always move you to Pro Plus at this exact moment, never before, never after. That's not true at all. I'm sure they have their reasons. I'm not in the know as to why. Some people don't get moved and they take tons of payouts, and they don't get moved for like ever. And then other people get moved before they even take a payout. I don't know why they do what they do, but I'm sure they have some kind of reason, obviously. But I don't know. So there is no normal. So if you got moved from Pro to Pro Plus, you're like, what the hell? I've never taken a payout. Is this some kind of mistake? I don't know, dude. Roll with it. Make money. Make money, bro. All right, here we go. There's the rollover into bar 36 into 37. You got a bit of a wick up top. This is going to be the first bar closing outside the range. It's pretty far outside the range, so I could have a stop limit buyout right now, though I got to tell you, no fill, no trade, most likely anyway. So we'll let that go, and I will watch bar 37. See how it's not taking out the wick high? It's been, what, 35 seconds, still not taking out the wick high? Yeah, let that one go, and I'll wait on bar 37 here to see if it can be a repeat maybe of like 34, 35. Yeah. All right, we got Trump speaking at any moment, supposedly, according to Fox. All right, 245 out. Come on, bulls, hold it up. I'm trying to get long. But not if they pull that back into the range. There, oh, shit! Trump talking? Oh, man. Was anybody just sitting long? There's a pop through 25.4, huh? 90 seconds out. Man, unless these bears take it back into the range, I gotta tell you, I'm looking for any reason to get long. Any logical reason still has to be logical. Come on, bulls. Come on, you bulls. Take it up, close it nice and high. 30 seconds. And give me 1,000 contracts long. $20 seconds. Ugliest bar I've ever seen. Tiny bear body, 37, rolling over to 38. Beautiful, you bulls! I don't mind that too much. Now let's just hold that guy up. Should we pop over to the 2, see what's up over there? Let's pretend we didn't look at the 2-minute chart. Right back to the 5. So, again, we have Trump supposedly speaking at any moment here. Minute 40 hour from the close of 38. Oh, you bulls, you're killing me! These wicks on 37.38. Give me something to work with here, big dog. Get up. 30 seconds. Well, I'll get ready here just in case we get a last second pop. You never know. don't think so. Inside close. Yep. All right. On to bar 39. This is going to start looking like a sideways range on a 2-minute chart. You see this? Really any lower time frame. Okay, Trump is live. If anyone wants to drop some headlines in the chat, feel free, by the way. Hey man, if you haven't yet, I appreciate you hitting like on the stream. Oh, bar 39, come on now. Give me something to work with, my man. But is he actually, are you guys joking? Stop. You guys are playing with me. I thought you said he just got McDonald's delivered to his fucking station. He did? I'm sorry, how can you not think that this is hilarious? I love it. All right, bar 39. Pulling back into the range. Oh my God, look at these wicks. 37, 38, 39. This market doesn't know what to do. Impulse, can you explain your strategy? They say I'm a new viewer. Welcome, big man. How are we? I trade RAM, and for me to explain it in 2 sentences would be doing you a great disservice, so stick around. It is effectively my take on price action that finally got me to clarity and consistency. I hate being confused. And in my opinion, most strategies are incredibly subjective. RAM, there has to be nuance involved. If there's not, it won't work, right? Because if there's no nuance involved, then instantly the base rules would just get programmed into the algorithm and it would run forever, and then it would remove the edge for everybody. There has to be nuance involved which is why RAM starts with the top-down methodology. It starts with context, which is part of the nuance here. And then you try to fit the most logical setups you can inside of that context as long as you can manage risk in a logical way. So it keeps us clear, level-headed, emotionless, stoic, not confused for the most part, as much as you cannot be, you know, looking at everything. And again, this wasn't built for you guys. This is built for me. All right. So if you were to look at this, I'm not even going to pull it up, but if you were to look at bar 37 through bar 40, which is, you know, the last 15, 20 minutes, you would see on a smaller time frame, you would see a sideways range with quite a few attempted breakouts that failed, which are represented out here on the 5-minute by those wicks on 37, 38, 39. There you go, bulls. Come on now. All right, what did Trump just say? If anyone's listening in live, drop it in the chat. All right, 30 seconds out here to the close of bar 40. Market's still stuck in this little new sideways range. All right, bulls. Give me a nice clean close. Let's pop this thing well above the wick high of 38. Not too much. ATR sitting 35, which is quite a bit better than what we were seeing before. What, 28, 29 at one point? Again, bottom right of your screen, that's the ATR. Which represents the average point range of a 5-minute bar, since we're on a 5-minute chart here on NQ. There you go, bulls. All right, we got about 3 minutes. This is what a 2-minute chart is looking like right now. Yeah, you got what would be the first bar closing out of the range on a 2-minute, which is a little jumpy. See, bear's trying to take it back into the range here, wicking that bull body back. Let's see if the bulls can step back in and reload. Oh man, you bulls, bunch of babies! 2 minutes! 2 minutes, they're having trouble getting up outside this trading range. Wick high of 38 is kind of what I'm looking at. Question, what do you think of a short here? They say it looks pretty good. Not for me. Not for me. Not a chance until I actually get a real, honest-to-God short setup. I used to do that a lot. Every beginner trader does the contrarian thing and thinks that they're kind of like the only one doing it. I know traders. I know traders very well. And everyone thinks that they're the smart one. They're like, this thing's gone too far, man. I should short this, risk the wick high of 41. We'll take out the low a day. 12-to-1 reward to risk. It'll go crazy. Yeah, everyone has that contrarian mindset when you first come in because it's natural. We're wired that way as human beings. It's very normal to feel that way coming in, but I think you'll very quickly learn that that's a really quick way to take on more heat than you can afford to do so, whether you're trading prop or personal. All right, ATR sitting 35. All right, Trump's all done. Is that right? He's addressing reporters right now, I believe. All right. Probably nothing we don't already know. You know, you got to think if something was going to come out, it probably would have come out before he's addressing the reporters outside, right? So we'll call that relatively clear for now. Still, if you're taking trades, make sure you have that live stop out. You never know. Question, you think shorts will be in play here soon? Not for me. Not for me. Look, for me, shorts will be in play when they're in play. And right now, they're not in play. For me. Now, I also, in the same breath, I would like to add to that. Let me give you a little secret here. To elevate your status as a trader among other traders. Not that you should give a shit, but let me just tell you what to do. Never come into any chat room ever or in person and say, wow, that trade that somebody else took was so fucking stupid. I'm smart. I have the right trade. Because you are overestimating the probability that your trade is a success, assuming one-to-one reward to risk, so that probability is an easy number to quantify. Or a simpler number to quantify, right? There is no such thing as a dumb direction. If I shorted right now, some people would say it's stupid. If I bought right now, some people would say it's stupid. Neither are dumb. There's just, for me, how I manage it, there's positive expected value, and then there's everything else, which is break even and negative expected value. If getting short right now was the stupidest thing in the world that you could ever do, the market wouldn't be priced where it is. So actually saying that what someone who did the opposite of you is dumb, that is the dumbest thing. Because the price is what it is. So just because you're long, don't say that getting short is fucking stupid. Actually, you sound that way by saying that. The greatest probability you're ever going to get at a one-to-one reward to risk is going to be in a ridiculous trend market, and it's about 70%. At a one-to-one reward to risk, someone's going to take this out of context and say, you know, Roensch said this. Of course, you can get a 98% probability if you're going extremely low, negative reward to risk, right? I understand. But I'm saying at a one-to-one, the best it gets is 70-30 approximately. In most trades, you're sitting about 60-40. Most bars throughout the day, 50-50, which is why I'm sitting flat right now. All right, bar 43. Come on now. Give me something logical to put on, man. All right, 222 out. Let's see how bar 43 closes up. Go, you bulls. News, what's up, brother? Big Chris, how we doing, homeboy? All right, bar 43. 60 seconds. And I gotta see the bulls take this guy up. at least close it above the wick high of 41. Oh, 43. Alright, ATR is still hanging on, 31, 32-ish. Got bottom right of your screen, that number in red, I should say. That is the average range here of a 5-minute NQ bar in terms of points. And 31, 32, that's not a bad number. Could be better, for sure. But with this price action, if this lasts too much longer, that's going to end up down in the mid-20s at least, which we don't want. So let's get this guy moving! ATR being 33. Wick low at 39. 60 points away. Tough to make sense of that, isn't it? Alright, I'll tell you what, don't you go anywhere. I'm going to be back real quick. I'm just going to grab a cup of coffee. Be right back. Don't you go anywhere. All right. What's up? Yeah, Roy, big dog, how was the wedding, man? Good to hear, my man. We love it. All right, bar 45. Yeah, you know, I've got half of mine to size down a little bit. Put a limit buy below 44. Risk 1 point below the wick low of 39 and walk away. That makes logical sense, doesn't it? But I gotta wait here because this market does not know which way to go. But as soon as I get something reasonable, I'm throwing it on. We're one trade in. One trade into the stream here, 6,500. All right, come on now, bar 46. Do what we need, which is anything. Oh, man. All right. All right, bar 46 here, minute 20 out. So I gotta tell you, I'm not, you know, with how small this risk is, to me, the wick high of 41 is not like the end of the world. There you go. All right, 45 seconds out. Let's see what we get here on bar 46. Let's see. Bear's trying to pull it back in. 20 seconds out. I'm going to get long and risk the wick low of 44. 94.75. There we go. Got 70 micros on. ATR sitting 29. Kind of a slow market here today. All right, bulls, big dogs. Let's pump this baby 400 points. I don't care that ATR is 29, man. I'm long. So I'm going to need you to go ahead and do that. Volatility nice and slow, controlled. Until Trump says one thing and it shoots 80 points one way or the other. ATR hanging out just below 30. Bartlett says ATR is shit. It's not too bad. I mean, look, an ATR of 29, is it great? No, it's not great. Below 30, you start definitely getting into more lower volatility trading. Below 20, our job gets kind of hard. I should say it gets tougher. Below 10, on a 5-minute chart, at least on NQ, it's time to walk away. That is not universal, by the way, for instruments or time frames. I'm specifically talking about a 5-minute NQ chart. Obviously, that changes based on instrument and or time frame. Man, if you haven't yet, by the way, I appreciate you hitting like here on the live stream. Hey, or dislike, big dog. Whatever you want. Same thing, brother. Bulls. I mean it now. I am sitting long, which means I bought. Average price 424.25. ATR falling a bit, down to 27. Down here in red. Don't want volatility to slow too much here. Go on now, Bulls. Oh man. You would think the ATR is about 4 right now. The same 3 ticks around break even here. There you go, Bulls. Two points in the money. Time to book it up, right? Is what everyone always says. Numbers under my candles. Those numbers are counting the 5-minute bars since the New York session opened. You might say, why do you do that? Because it is really, have you ever tried to explain what bar you're talking about when you have 24 different time zones in the chat? And in the tomb, which was the original use case for it. It's not so simple. So bar numbers, say, hey, Nico, I bought bar 22, made 800,000. What do you think? ATR 27. These bulls taking their sweet time, man. Let them take their time. All right, there's the rollover bar 48 into 49. See, it's a good thing we've got a nice bar 50 on the way. Bar 50 has some lore around here, so maybe it'll step in and pump us about 200 points. All right, ATR now down to 25. I'm going to go for a full ATR here on this trade. About halfway there. Why take profit up at 514? I leave my take profit exposed because of news. Because if I'm going to be driving manually, meaning using my hotkeys anyway, well, then I might as well stay overexposed to the profit side, because we've seen it happen plenty of times where Trump tweets and all of a sudden, instead of getting 25, 30 points, I get 90. Which, you know, only helps. If I'm going to be exposed to a 50-50 news event in both directions anyway, I might as well be exposed more to the higher volatility if I'm driving manually. Now, if I'm going to walk away from the screen, I'll put my take profit where I actually need it. But if I'm going to be here, driving manually, might as well, right? No, I'm talking unexpected news. All right, bulls, do it to them. Nice and slow. That's all right, bulls. You can be a little insecure. Come on back inside. We'll rub your shoulders up a bit. Talk real sweet and nice. And then we'll send you back out there to get it done. Hey, man, hit like on the stream. I appreciate you guys doing so. Helps out a whole bunch here. Alex, what's up, brother? How we doing? Doing well, my man. Just waiting on a slow market. That's okay. Story of my life. Sitting in a trade while the market bounces back and forth 3 ticks. Question here, just curious, is a $700 win not enough for you? Nope, it's not about money. It's not about money, it's about edge. I don't care if I'm in a trade and I'm up 7,000. It's about edge. Did it hit my predetermined target? No, it did not. Did it hit 1R? I'm sorry, 1 ATR in this case? No, it did not. You know, I think a better lesson, it's hard to internalize, but if you can, I think you're going to make a shitload of money in this industry. What you really need to internalize, and I'm not just blowing smoke, I'm dead serious. I tell my tomb guys this like every fucking day. There are 2, we'll call them balls, floating in front of you. Picture it like the, what's it called? The snitch? Is that what it's called? From Harry Potter, is that right? I know some of you guys know. The gold one with wings, and it's shimmering in the sunlight. That's money. And then you have one that's kind of just like a dull gray. And you get to pick which one you spend the most time looking at. Almost everybody looks at money. The snitch, the shimmery gold one that's kind of flying around, hovering around. Then you have this one kind of just bobbing up and down in the air. It's dull gray, it's ugly, it's boring, it's not exciting. But ultimately, you want the snitch. How do you get it? If you stare at it, this thing's kind of weird. If you look at it too much, it's going to run away from you. It doesn't like it. Right? It doesn't like being stared at. And if you just try to reach out and grab it, it's going to take off. And it's faster than you'll ever be. If you focus on the Ferrari, the Lamborghini, and the mansion, the penthouse, it will run away from you in this industry. And I don't mean psychologically. I mean it's going to drive your decision-making to do things that give away what you need to make money consistently, which is statistical edge, positive expected value. You have to stare at the dull, boring ball. What does that ball represent? Can anybody in the chat tell me? Can anyone in the chat tell me, what does that ball represent? Nope. Nope. Kind of, but no. Edge! Brandon! Ding, ding, ding! It represents edge. If you focus on that ball, edge, it's boring as shit, by the way. But if you focus on that, guess what the snitch, the golden one with the wings does? It comes right to you. That's money. It nuzzles up on you. It rubs on you. You don't even look at it. You're like staring at edge. I want the boring one. And this one comes up. It comes right into your palm. That is this industry. Do you understand? Now here's the reality. 90% of you are going to listen to me say that. You're going to say, oh yeah, I get it. And then go right back to staring at the snitch. I'll see you in 5 years when nothing's changed and you're coming back saying, I'm ready to take on some edge. This is my stream, big dog. I'll shout if I want to. This is the wrong spot if you don't like energy, man. We're getting after it. Bar 50, doing nothing. The lore has failed us today, and we're still sitting basically break even here on the trade. That's okay, let it do its thing. We'll see what they got for us, man. Question, it's hard to hold if you're up a significant amount of dollars. How did you do it when you were starting? I got sick of being destroyed. I got sick of losing. So I internalized what the business model actually is of being a trader. How do you actually make money as a day trader? Is it buying and selling and feeling good about yourself and going to nice hotels and opening up your phone and saying, ooh, another 40,000? That's not what trading is. That's what trading can be if you have edge. But I internalized this is the exact same business model that a casino is running against you, the player. It is no different. Does the casino get upset if they lose one hand of blackjack? No, they come and offer you a stake and say, hey, we'd love to have you stick around. And you say, wow, they're so nice here. They must really like me. Hey, we have this private table for you. Would you like to come play alone? And you say, wow, this is great. Beautiful hotel room. And then you lose everything because you play 1,000 more hands. They're getting your sample size up. The business model here in trading is procure statistical edge, retain statistical edge, increase sample size. That's it. That's the business model. So I said, okay, if that's the business model, then that's what I'm going to do. And how I feel is fucking irrelevant. Egypt, what's up, brother? We are trading NQ, 5-minute NQ chart, futures. Well, we are sideways, basically, from bar 48, 47, I'm sorry, 46, 47. Someone says there are thousands of different business models. I understand. I think everyone else understands too. There are many different trading strategies. There's only one business model. You understand? We're not confused. Okay? There's only one model that works in business in general overall. What is it? To have profit margins. You have to make a profit. There are thousands of different, there are infinite ways to get there, is the point. We're speaking as a whole. What is the business of trading? Because people don't, believe it or not, people don't get it. If you don't know how you make money in this industry, you're lost. I'm sorry. Now, how do you get there is a million different ways. You want to trade RAM? Be my guest. You want to trade something else? Have at it, big dog. But if you don't have a positive expected value, which is driven, usually you end up not getting that by making the very common mistakes that everybody makes the same mistakes, by the way, because we're all wired very similarly. New traders, including myself when I came into the industry, don't want to listen to older guys because they're like, or at least more experienced guys, regardless of age, because they're like, yeah, but I know what I'm doing. The market's gone too far. I got to short this thing. I'll risk 1 to make 20 and then expect to have a 70% probability of success. That's not how this works. it's a similar math equation, but that's not making too much sense. Then you wonder why you lose, 95% of trades. All right, we're on bar 52 here. Keep watching this guy. Nice and slow. ATR 22. Oh, God, ATR is tanking. ATR is tanking. All right, we have 4 minutes, 25 seconds out here until bar 52 closes up. Let's see what we get. Tubed out. Passed my 150K eval on the free account that I won here. Thanks. All right, big dog. Good work. Good work. Keep it pushing. Go get daily payouts on that thing. All right, let's see in the chat. Not that it's going to influence what I do, but let's see in the chat, man. I want to know how many of you would close this trade right now. I'm sitting long. I bought, risking the wick low 44. How many of you would close it? How many of you would stay in the trade and let it do its thing? Close, close, close. Stay in, leave it, stay. Ooh. News says ruins the data, I gotta stay in. I like the answer, News. Good word, big dog. Chuck says stay in till the trade is invalidated. I love the answer, big man. I love it. Brock says I would close. Bernard says play it out. Panda, how we doing? Timmy says nothing's changed. Stay. Yeah, for me on this trade, since I entered, a crack of the wick low 44 is enough for me to say, okay, I'm no longer confident enough that my expected value is above break even on this trade, so I cut it. Those two things should line up, by the way, approximately. Where you choose to manage your risk should be about the point where you say, I'm no longer confident enough that I have a positive expected value on this trade over 1,000 trade sample size. So I'll cut it here. Which for me is right below the wick low 44. So let's see if the bears got it. Ooh, you bears. You bears. Four minutes out here to the close of bar 53. Now watch Trump tweet, and we get Miracle on Wall Street Part 2. Well, ATR's sitting 21, 22. It's low, man. Volatility's not that high. Let this thing sit. Let these bulls work. Or see if they can, I should say. Man, it's a battle down here, isn't it? It's a battle here at the low end of this sideways trading range. That stop placement is no accident. R53 closing as a very small bear body. All right, Bulls. Go, baby. 200 points. Give me a shitload of slippage in my favor. Bulls, you bunch of babies. Alright, we're 3 minutes out here from the close of bar 54. ATR falling, man. We're down to 21. That's not great. That's not great for volatility here, I gotta tell you. So halfway through bar 54 here. Most probable outcome on 54 is that it closes as a 200-point bull body. Joking, of course. All right, let's run a poll. Oh, man. The odds are stacked against me right now, aren't they? Aren't they? Oh, man, we got the whole crew betting against me. You're playing the probabilities of the current situation, aren't you? I love it. Bears pull it in. 10 points from my stop, which is right below the wick low of 44, which is right about the point that for me is just enough to flip me to, yep, I'm no longer confident enough that there's edge on this trade, so I'll cut it. But the Bears got to earn that from me, man. They got to break the wick low bar 44. Ooh, this is a very good question. Listen carefully, okay? This is one of the most important things you can ever learn about this business. Someone asked, shouldn't you cut the trade if you think that the probability has changed against you? You would think, yeah, right? Hang on now. The equation for edge is not just probability. It's probability with current reward to risk. Okay, so when you're taking on a lot of heat in a trade, at that exact moment, I'm not talking your break even with stop and take profit. I'm talking at that exact moment when you're getting near your stop, there's a low probability that you win the trade, and there is a very high reward to risk from your current position if you're taking on heat, correct? That doesn't necessarily mean that the edge long term is screwed. Probability isn't the only thing in the equation here. You also have to consider real current reward to risk on top of what you initially put on, right? Man, hit like on the stream. Let's see if we can kind of work this one out here. Let's have the Bulls take this. Let's get some new highs rocking and rolling. Man, we've got work to do. ATR 20. Come on now. Well, go on, Bulls. Do it to him, big man. $60 seconds out here from the close. Big bar 55 here on the 5 minute. Well, the poll here is slowly starting to be a little bit less against me. Still, the majority of you guys think I'm losing this trade. That's okay, I don't take offense to it. All right, Bulls, that last bar brought us about 12 points higher. At least the body. That's about 5% of the way there. I'm going to need at least 240 points. Just kidding. Boring Trader says it's never, ever, ever about a single trade. You're damn straight. All right, we are 50-50 here in the poll. Question here, another tremendous question. Man, we've got some fucking future superstars here in the building. Someone says, Nico, if your trade is in the money and it's making money, quote unquote, would you ever buy more micros to increase your profit? That would be called adding to a winning trade, right? Now, in prop accounts, it's a little harder to do that because you have to start your position a lot smaller so you don't outsize yourself. But you also got to understand what you're doing. When you add to a winner, what are you effectively doing? Well, you're increasing your risk on the trade, right? You're changing one or both variables, probability and reward to risk. Okay, so would I add to it? Well, the answer is if I'm trading a personal account and it's a giant trend market and I get a supporting setup while I'm already long, then sure, yeah, I might add. But you gotta understand how that changes the math of the trade. And if the answer is, yeah, I wanna change the math on the trade, I'm cool with that, then do it. But you gotta understand that when you're trading prop, most of you guys are not using starter positions that are small enough to be able to add and have it still be a logical, responsible trade. The risk becomes outsized really fast because prop accounts, they don't give you all that much drawdown. Julie says, close at break even, bro. Nope. Nope. That's not what my plan says to do. I'm gonna go ahead and do what I need to do. And if that means I lose the trade, then so be it, big man. Drac, big dog. Where you been? All right, we're still 50-50 on whether or not I win this trade. Drac says, I've been at work. This is your job, big man. What are you doing? And the poll slowly flips in my favor. I wouldn't be so sure yet. I don't know, man. All right, bulls, go on and do it to them. Break even here on the trade. What are your thoughts on Funded Next futures? Yeah, I'm not sure. I don't have enough experience with Funded Next. My two favorites are currently, in no particular order, Apex and TakeProfitTrader. They have different use cases. If you're trying to bootstrap going full-time, the move is to go to TakeProfitTrader, because you can get money in the bank account quickly, which you fucking need when you're broke. Now, if it's time to make the numbers look bigger, go hit Apex, because you can go to 20 accounts. Code BIG, baby! B-I-G at both of them, by the way. We'll give you the best deal all the time. But if you're somebody who is, you're not so certain of your edge yet, don't do either of those things, because you're just going to lose more than you need to and spend more than you need to. What you should do, well, should is, I don't like that word, because do whatever the fuck you want. But what I would do if I were getting started again with the experience I have now is, if I was like, I'm not so sure I have an edge, I would go to Apex, I would buy one cheap account, spend like $10 fucking dollars, $30, whatever, who cares, and I would trade one micro for a few weeks until I am relatively certain that I have an edge. Now, it's going to take you a lot longer than a few weeks unless you follow a logical methodology. But then once you are like, okay, I do think my expected value here is positive, then you can start moving into actually spending some money to get funded, because now all the leverage is yours. It's just time to execute at that point. Come on now, you bulls. Step in. I want 800 points. All right, now we shall see this poll start flipping against me again. Currently 53% in my favor. I don't know, man. That seems a little off to me. Go on, you bulls. ATR 19, dipping below 20. What do I say? Below 20, our job starts getting a little tougher. That's all right for now. All right, there's a close of 57 into the open of bar 58. ATR down to 17. Ugh. That's not great, I gotta tell you. We don't love that. Volatility tightening down. Ratchet down these straps on this market, man. This is crazy. Go on now, Bulls. Waiting on you, man. So, as you guys know, if I'm in a trade when ATR, if I enter when ATR is well above 10, which it obviously was, well above 10 when I entered this trade, if it dips below 10 here on a 5-minute chart on NQ while I'm in the trade, for me, that is one of my early management rules. So we're still at 17.18 on the ATR, so no worries quite yet. But we'll see if that ATR just tanks and dips below 10. I'll cut that thing, go to lunch. But for now, I'm hanging out. Question, they say if I already have a large portfolio, what's the point of a prop? Well, if you already have an edge, the point of a prop is leverage. You get more leverage than you already even have. Because if you have an edge, it's just more leverage. And if you do have an edge, it's, I mean, mathematically speaking, right now in reality, it's a little different if you don't have an edge. But mathematically speaking, if you do have positive expected value in your trading and you are ROI positive in your trading, then trading prop accounts on top of your personal account is what? Just more leverage with very little risk to you. That's the point if you already have a lot of money. All right, bar 58. We got 15 seconds here till the close. ATR sitting at 18. Comes the rollover into bar 59. And risk still managed below the wick low of bar 44. ATR down to 16 now, just under 17. All right, Bears, let's see what you got. question, what's the catch with the prop firms, though? The catch is that they're able to make the math profitable because most traders aren't able to make it work. That's the catch. There is no catch. It's a very transparent business model, actually. Most people suck at being disciplined, so they're able to be profitable. If you're good at being disciplined, then you're able to be profitable along with them. That's the catch. I don't think anyone's pretending that, you know, like they're just doing you a favor. They're making a bunch of fucking money. Guess what? It's opportunity for you to do the same thing. All right, ATR sitting 17. Volatility real tight. Real low. All right, go on now, Bulls. Or Bears, man. Anybody, I've got lunch to hit. But not until this trade plays out, I suppose. We'll see how long this thing takes. Again, this is my second trade of the day. We did 6,500 on the first trade, so we'll see what happens here. Bears, this is your third attempt, man. What you got? You want to take out that wick low of 44? All right, there's the close of 59 into the open of bar 60. Now, the probability right now in my current situation is not good. But in my current situation, forget about break even. In the current situation that I'm in this position, the reward to risk is huge. Now, if it breaks, that doesn't mean it's good, right? But it doesn't mean the edge is gone either. If it breaks the wick low of 45, for me, that's the point where I say I'm no longer confident enough that I have edge here to leave the trade on. So I'll cut it if we break the wick low bar 45. That's how I think about these things. But until that happens, I just have to let it sit. ATR 16.5. Bears are really teasing. There you go, Bears. What you got? Do you have the wick low at 44? Low volatility here. Yeah, could you imagine if we get a... Well, this would be on a smaller scale than the Miracle on Wall Street. I think the Miracle on Wall Street, that was a 5-figure trade, right? I think so. This one would not be. But it'd be a hell of a trade. Ooh, there's a little volatility, a little 3-4 point move. You know it's bad. And low volatility when that starts getting exciting. ATR 17. Oh, there's the rollover into bar 61. ATR into the 15s. Getting low. Well, I think my coffee just got here. Huh. I gotta give it a second, see what happens. Oh, Jesus. Alright. You guys know my position. You know everything that's going on. I will be right back. Okay, I just gotta go grab this. I will be right back. Hopefully we won't be out of this thing until after I'm back. Okay, but I gotta... All right. I got the goods. And we didn't miss anything. Oh my goodness. This is something else, man. This is the kind of trading, I mean, I gotta tell you guys, I mean, you know, we make the best of it, but you're gonna be in a lot of trades like this over your career. This is a little boring. You know, you sit here and watch this thing move 2 points, ATR 16. That's why I think, you know, being here and hanging out with each other is the move, man. Because otherwise, I think it's easy to drive yourself crazy if you're trading in a silent room staring at this. Go up and down, there's nothing playing. You're just sitting here like this looking at it. You go, after a while, you know, it's nice for a while, but after a while you go nuts. Justin says used code BIG this morning, my man. All right, there's the rollover. Close of 61 into the open of 62. How's this poll looking? 54% of you guys think I'm going to win this trade. Come on, let's get a little more betting against me. Do it to me. Hit lose, man. Hey, by the way, if you haven't yet, I appreciate you hitting like on the live stream. Hey, or dislike, man, whatever you're into. Doesn't make a difference. Drax says if you get stopped out, I'm getting the 40-piece McNugget delivery. What if I win? What? Yeah, if I win, you gotta get the 160-piece. The 80, fucking right. Come on, bar 62. 2.5 minutes out. What'd we get? A few ticks? Yeah, maybe a point of my stop loss. What time is it? Holy shit, it's 1:38? I'm losing an ounce of muscle a minute, man, here. The things I sacrifice for you guys. Come on, 62! Ten seconds till 62 rolls over here into 63, ATR 16. Let's see. Now below 15, well, sitting right about 15 here on the ATR. There's the open bar 63. I don't think I've ever been live this late. I'm loving it, man. Except for the volatility being 15. Come on, bulls. Take me from 3 ticks. 3 ticks from stop out. What do we think? Maybe 700 points in the money? I feel like that seems reasonable, right? All right, Bulls. Go on now, man. I want to see some confidence. These Bulls have been posted up in the corner all night. Lights are about to come on, man. Make your move. Someone says, ever since my friend showed me how to trade NQ and shared this channel with me. Well, that was nice of your friend. They say I've had a hard time sleeping. I'm watching candles day and night now. Yeah, welcome to the life of a trader. It's probably never gonna change. Well, back to break even here on the trade. Okay, now ATR is 16. My initial target was 1 ATR. Well, 1 ATR was almost double what it currently is. So I now have a decision to make. Do I still target my original 1 ATR, understanding that this is a range market and volatility is low, and I just take the equation that I can get and move on? Or do I target a full R? Well, what goes into that decision for me? For me, I start with number one, which is context, which rules over everything. And I know that right now the context is low volatility, range. So let's see how this develops and do the best I can on a trade like this. So a full ATR still remaining target since I'm gonna try to get it pretty precise though. So I'm looking for at least 16 and a half. Let's see. And range market, man, that's all. You got to start with that. Everything starts with context. Well, go on now, Bulls! Having trouble with the high here. That's all right. That's all right. I still got to go for my 1 ATR, but I can't sit here and expect them to break out the high of 46 and then realistically run, 100 points. That's just not the market we're in. Although I'd love to see it, that'd make for a very nice power hour, but see if the Bulls can get it done here. They had me quite close. No cigar. Go on, bulls. Minute 26 out. ATR 16.5. Low, low, low. Tight volatility. I saw 15 and change. Some of you guys might think this is kind of ridiculous discipline. No, this is really important to me. It's really important to me. The edge is everything. It's what lets you do this every day. So I'm very serious about that. So I'm dead serious when I say I'm going for precisely 1 ATR. And if it gets within 1 tick, pulls back, stops me out, I'm dead serious. To me, that's a W. Because my #1 priority is not this trade. It's retaining edge over a long period of time so I can keep doing this, you know? I like being a trader. Well, come on, bulls! Doesn't mean we can't win this one. Let's go! ATR 16.5. All right, there's the rollover from 64 into 65. Oh, you bulls. You bulls. ATR now 15.5, by the way. Boom! Give me a fill! Come on, give me that fill! Oh, you bulls, give me the fill. ATR popped to 16.5. Just where I need him. Gotta leave that out for one more second. Otherwise, I want to stay exposed. It's dancing. There we go. It'll take it. All right, so we made the best of kind of a weird situation there on that trade. Let my copy trader flatten here. It's getting flat from the ghost orders. All right, so I did, first trade was 6,500. That trade was 2,600, I believe, which leaves me up 9,100 on the stream here. Now that trade, again, hey, sometimes they get a little sloppy. You do the best you can to make the math still look reasonable, right? And that's okay, that's the importance of discipline. Not every trade is gonna be a beaut. Now, by the way, guys, me waiting for my particular take profit, this is not about pride. You guys get it. It's not about pride. It's not about money. It's about integrity to my trading plan, to the methodology, to the discipline needed to do this for a living. You got to get serious about this, because a lot of you guys are like, what's the harm? I'll take it 5 points early. What's the harm? Because you're scared that it's going to turn around and turn into a loser. You're more focused on what we talked about earlier in the stream. You're more focused on the gold snitch money than the dull ball edge. If you stare at the dull ball, the snitch comes to you. If you reach out for the snitch, it's going to take off. You'll never catch it. The business is edge. I am dead serious about retaining that for myself, because if I don't, then it all goes to shit. This is not about pride. This is not about money. This is about integrity and having a career. And self-respect, by the way. All right, guys. It's about that time, man. 2 trades, 9,100 bucks, 91.32 to be exact. I'm out of here. Hit the like button on the way out, man. A smaller, tighter version of the Miracle on Wall Street Part 2. I will see you guys tomorrow morning. All right, hang in there, man. Hope you guys have